Welcome to Realcast, the weekly roundup of the real asset markets. I'm joined by Dan Innes. And in the wider news over the past kind of few days, I thought it was interesting to see the first satellite launch from the UK. And although it failed, obviously, it does highlight the growing focus on space and satellite technology as part of the advanced manufacturing sector. And that's seen significant investment and is set to grow, I'm sure, over the next few years. We've certainly focused on that, including a session around what was happening there in Scotland. In our news lines as well, there was a big focus on living assets, with HIH Invest Real Estate acquiring a residential portfolio in Germany from Quarterback Immobilien, ECE Living buying in Copenhagen for its ECE Better Living Europe fund, Patron, Bluestone and FREO extending their sort of activities in Milan. So a lot around that living side, particularly in the news this week. Dan, what have you been tracking?
Well, I mean, this week is already a busy week, although we're first full week of January, starting with M&G. I mean, they've announced that they're raising about 578 million euros for a new European property fund, kicking off 2023. It's going to build off the team's 1.3 billion UK residential property investment strategy, where it's already provided about 3,500 rental homes already. But it's going to launch it with 578 million euros in capital. That's with funding for the European strategy from a 400 million investment from Dutch asset managers MN, and a 178 million euro investment from the Prudential with Profits Fund. Elsewhere, over to the Netherlands, alternative investment firm King Street Capital Management, they've sold Pharos, and that's its 25,000 square meter office building in Hoofdorp in the Netherlands. And that property, which was originally built in 2004, has quite a sustainable focus to it. They had already achieved both A+ EPC and BREEAM in use excellent ratings, and that building sits in Amsterdam's established office zone with strong connectivity to Schiphol and the city, of course, and it's currently 89% leased to quite an international and diversified tenant base. So King Street even managed to, rather nicely timed, completed a renovation of the property over COVID, completing it during 2020, and transformed it into an appealing multi-tenant office. And Paul Brennan, who the MD and co-head of real estate at King Street, said he's pleased to have completed on that business plan of the project, further supporting their investment mandate and transforming well-located real estate in key European cities. Also in the week, we saw, unfortunately, Amazon, under the guidance of its chief executive, Andy Jassy, they announced a number of changes to its UK business. And during COVID-19, as with many online retailers, Amazon experienced rapid growth, and we saw that knock-on effect into the logistics requirement market, and they saw their profits during that period rise 220%. Amazon invested pretty heavily into logistics and data centers, but could they maybe have overestimated how fast the sector would continue to grow after a post-lockdown world? Well, Amazon this week, they announced that their response is going to be pausing some of the rollout of their Amazon Fresh supermarkets, and warehouse closures a part of that as well, sadly, putting about 1,200 jobs at risk in the UK, although many of those workers are going to be offered jobs elsewhere. But the companies simultaneously announced that they plan to open 2 new centres and create 2,500 jobs over the next 3 years, including a new warehouse in East Yorkshire. Although an article in Charged Retail says that Amazon is not bulletproof to the tough macroeconomic climate, and businesses like them find themselves in, I think you'd be hard pressed to bet against Amazon at this time. There was another article in the Times that reported that ASOS, the online retailer that owns Topshop and Miss Selfridges, they're due to reduce office space and close warehouses as well, after a fall in sales at Christmas time. And they've blamed the downturn on weaker consumer sentiment, the Royal Mail strikes, and other disruption in the delivery sector. But that resulted in earlier cut-off dates for Christmas orders. But ASOS, whose shareholders include Mike Ashley's Frasers Group, they've implemented a £300 million cost-saving plan as it battles rising inflation and falling consumer demand. More broadly, investment into logistics seems still pretty buoyant. CoStar's reported that the UK industrial and logistics market saw another strong year of occupier demand in 2022, with 32.4 million square feet of logistics space taken up. And in that same vein, the last story I've been following really is that of L&G selling one of its logistics parks, and that's Fradley Park in Lichfield to Ares. Now, Lichfield is up in Staffordshire in England, just north of Birmingham, just quite close to the M6 toll road. It's home to logistics logistics centres for occupiers like Screwfix, Tesco, and DHL. And as part of that as well, Ares are going to pick up the scope for another 1 million square feet of development. So L&G is offloading the asset to raise a bit of cash to meet its redemptions. According to React News, it's going to exchange pretty soon. Over the last 3 years, L&G's funds under management have fallen by about 1.3 billion pounds. That's about 42% down to 1.8 billion pounds at the end of November last year. And during that time, it's had to deal with certain redemptions prompted by the onset, obviously, of the pandemic at the time. And of course, last summer, there were further waves of withdrawals as a result of the rising interest rates, and a note about the denominator effect playing a role as well.
Yeah, the denominator effect actually coming up quite a bit. So I'm going to test you, Dan. What is the denominator effect?
Yeah, well, the denominator effect is an interesting one. We think a lot of clients and owners are seeing the impact of that, fund managers. It kind of occurs when the value of one part of a portfolio decreases drastically and pulls down the value of the rest of the value of the portfolio. So as a result, any bits of the portfolio which did not decrease in value, however, now present a larger proportion of the overall pie. So yeah, the denominator effect, Richard.
Okay, excellent. I've been looking at events again. We've just launched our events that we're going to be doing at MIPIM. So for the first time, we're creating with MIPIM an investment track as part of the official partner program. So we're going to be focusing on living there, but logistics, as you mentioned, also debt, a very key topic, as well as some of the bigger trends like capital, ESG, and opportunities in Europe more widely. But I was also this week at the CMS EPRA Outlook 2023 event in London. Great to see that back in person, catch up with a number of old friends in the market. And also, Dan, meet Mark Busbridge-Simo from Alpha Property Lending, who is a fan of Realcast. Thank you, and nice to meet you, Mark. It was an interesting CEO panel, I think. Mark Allen of Landsec, Toby Courtauld of Great Portland Estates, Harm Meyer as well of ICAMAP, Michael Morris of Picton, and Jonathan Murphy of Assura. So picking up the healthcare side there as well from Assura. And some of the sort of key takeaways from my side were a return to property managers rather than financial players. Also very much a focus on best quality ESG assets or something that can be upgraded, and very little in between. And that was picked up as well by a lot of mention of the fact that averages in the current market are really misleading because polarization at the moment is so extreme. Overall, I thought it was kind of cautious optimism. Everyone on the panel, for example, was expecting to be a net buyer over 2023, apart from Mark Allen, who was expecting to be a net seller. But that was mainly because he was expecting opportunities to arise much more towards the end of the year. Interestingly as well, the panel were asked to summarize 2022 in one word. There were lots of interesting and good words from the panel, and they were all significantly more polite than the word chosen by my neighbour in the audience. But overall, a really, really good event, and great to see people back again. Thank you, Dan, for your pick of the week. Thank you for watching, and look forward to seeing you next week for our regular roundup of the real asset markets.